Hello and welcome to our weekly interview with the fund managers. Today we have Alex Crook, fund manager of the Bankers Investment Trust. And this is a global equity portfolio investing in every major market across the world through the portfolio sleeves, and it's looking for both income and capital growth. Alex, welcome to Questioning the Manager. So let's start with the US. You've upped your weighting there over the past 3 years, and the UK has come down. Now, the US market is a lower yielding market than the UK, so have you found this has affected your income?
Well, you might think so. The reality is actually no, it hasn't, and the reason really is about dividend growth. So although it's starting from a lower level, the growth has come through very strongly in the distributions from the companies we own. So we get very strong dividend growth out of our US portfolio. We've also, of course, had a strengthening dollar over the last 2 or 3 years. So when we translate that back to sterling for our investors, paying dividends in pounds and pence, it's produced some very good income flows. We've also increased investment in some other areas like China, like recently into Europe, which are high yielding, which have balanced that US as well. So no, we've managed to mix and match around the portfolio to mean that dividend growth has still been very progressive in Bankers.
Okay, last year we saw some pretty positive economic data from China, and also Trump's election started the reflation trade, so investors expecting inflation to come back into the system. It seems like inflation hasn't come back in a big way. So why is this?
Well, I'd argue in a sense it is, but just as always a little bit slower than investors' expectations. So inflation 2 years ago was roughly zero in many markets in Europe and America and the UK, and it's now trending sort of 1.5% to 2%. So we have seen a little more inflation. Now, I think the key drivers of inflation, if we look back into previous periods of higher inflation, are bank lending and wage growth. So those are the two components that tend to drive higher levels of inflation historically. Now, bank lending is really under very strict control. Banks are still trying to increase their capital, and that's not out of control. But I think in terms of wage growth, this is why it hasn't come through. Wage growth is still very muted, but I still feel there are the conditions to probably see higher levels of wage growth in the future, i.e. very low levels of unemployment. So employers are going to have to start paying up higher wages, in my opinion, to get good quality staff. So I still believe that periods of inflation maybe at 2 to 3% are still likely in Western and developed US and European markets.
You wrote an article recently about Japan and the corporate change that's unlocking value there. So do you want to explain a little bit about this article?
Yeah, I think what we're very interested in, again, if you take a more medium-term look at the last 10 years or so, we see particularly preponderance of new regulation coming out of Japanese companies, particularly driving independence of boards. So directors that are running companies, increasing independence, so a majority of independent directors, not employees of the company or other companies that are invested in that company. So that in our sense, what we're seeing is driving, I think, better decisions and more independent decisions in terms of capital employed in the business, investment spending, and rewards in a sense to shareholders in terms of dividends coming through. And so, all that is leading, I think, to a better market where companies are allocating capital, I think, more sensibly. And we're seeing, again, that's another market where we're seeing very good dividend growth coming from our investments.
How are you seeing valuations globally? It seems markets could be perceived as a little bit toppy.
I don't think they are. I think we're into sort of fair to, sometimes expensive valuations, but more like fair valuations in many markets. They're certainly not cheap. But when we look at Europe, sentiment is very low, particularly in that market. We're seeing strong earnings growth coming through, but off a very low base. There's still a sort of an echo, I suppose, of the financial crisis in terms of corporate earnings being from a low level. So there's potential for pickup there, which might make valuations actually look quite attractive. In America, yes, they are expensive, certainly in some sectors like the technology area, but actually, again, growth is coming through very strongly there for certain names in that sector. So, I still feel markets are fairly priced, and therefore, relative to credit markets and fixed interest, the returns that they should generate should be quite attractive.
Okay, finally, Alex, how is the income in the Bankers portfolio?
Well, we have a lot of reserves. So over the last 20, 30 years, we've squirreled away some income in the good years, and therefore we've got almost 2 years of revenue reserves to support dividend growth. So we're very confident in that aspect of the trust, but also the board in its annual statement early in the year forecast a minimum dividend yield of dividend growth rather of 6% for this current year, 2017. And they reiterated that in their interim statement published in June. If you look at the earnings the trust is generating, they were up 9% in that first 6 months. So actually we're seeing a very good position in terms of our dividends. Obviously that's a board's forecast of where they see growth coming through, but I think they reiterated their confidence in those numbers.
Alex Crook, thank you very much.
Thank you.